We're speaking with Tyler Radke, Citi's co-head of U.S. software equity research. As you can see here, he called it his words, bookings bonanza, and upgraded Oracle to a buy with a target price of $410 per share. Tyler, I guess maybe the first question is, why was it a hold to begin with? And now it's a buy. I get it. But overall, this is one of those scenarios where every analyst out there got caught by surprise just how bullish the forecast is for the next 3 to 5 years.
Yeah, look, I mean, we were neutral rated on this stock for a number of years. I think our concern was around their ability to convert this backlog into revenue and particularly profitability. Obviously, this was a monster quarter from a bookings perspective. We were well above the street, but certainly weren't expecting $300 billion of new RPO added to the business. But I think taking a step back, I mean, what's crazy about this move, I mean, our numbers for revenue and EPS for FY28, which is 2 years out, they went up by 25 to 30%, right? And so you look at this move in the shares up today, almost 40%. On a valuation basis, it's actually not that much more expensive than it was earlier this week. And certainly pre-market, when we upgraded it, the shares were up only about 25%. So our view is, I mean, you're going to see revenue growth for Oracle at a consolidated level approach 50% in a few years out, which is really unheard of at this scale. We think there's going to be a lot more exciting news to come, whether that's additional contracts. They talked about more bookings coming in the next few months, closing in on $500 billion of RPO. And then they have their AI World Conference next month in Las Vegas, where we think they're going to give additional surprises on margins. And so stepping back, yeah, the shares are up a lot, but they're trading at kind of a mid-30s earnings multiple on our numbers for FY28, which is right about where we value Microsoft. So I still don't think the stock is particularly stretched here.
All right, 47 times, as we're showing on the screen here, 47 times forward or expected earnings for the next year. I also, Tyler, just want to put some numbers. You mentioned kind of like that compound annual growth rate for certain parts of the business. I just want to put some numbers behind it because they're pretty dramatic. When it comes to the cloud infrastructure business, OCI, the infrastructure revenue that they're expecting in 2026 is now $18 billion. It goes to $32 billion the year after that, $73 billion the year after that, $114 billion, and then $144 billion. So over the next 5 years, that is a massive ramp up. As we talk about just how fairly a company should be valued with that kind of a growth profile for one of its fastest growing businesses, how exactly then do you model out what a price target would be?
Yeah, well, so, and again, so the numbers I was quoting was on FY28. So the forward is kind of more looking at FY26. But I think in a year from now, we will be looking at FY28 for that valuation. And you're going to see revenue growth and earnings growth really accelerate in 28 as they get this huge amount of capacity coming online. So obviously the big question is, like, can they convert this RPO into revenue, right? There's a lot of things that have to happen, right? They got to get the power contracts, that, you know, the sites and the data center floor space has to be there. The chips have to be there, right? And obviously the customers have to ultimately pay for these things down the road. But again, these are super high quality customers. You're talking Meta, XAI, OpenAI, Microsoft, right? Some of the most well-funded companies in the world. So we don't have a lot of concerns on that. But again, I think it does become, you know, the exact phasing and timing of these things is always a little bit trick to model. But I think, you know, big picture, we kind of know where this is going. It's accelerating top line growth, accelerating bottom line growth. And we still think there's a lot ahead in terms of new contracts and potentially additional raises to profitability as we get into next month's Analyst Day.